Now, even though Bitcoin is digital money, it can't be created endlessly. Verifiable scarcity is core to its value proposition. Foundational to the Bitcoin protocol are two concepts related to scarcity. First, there will only ever be 21 million Bitcoin. As of late 2020, there were less than 2.5 million Bitcoin remaining to be virtually mined. Second, the amount of new Bitcoin added to the network will be reduced by half every 4 years. This second concept is referred to as the halving. Now, for those trying to make sense of this complex topic, today we're going to talk about what exactly is the Bitcoin halving, its effects, and why is it needed. Hello guys, welcome once again to Alpha Finance. This is the channel to watch if you want to learn more about personal finance, investing, and cryptocurrency. However, before I get into today's topic, do me a favor, subscribe and hit that like button because it really helps us out with that YouTube algorithm. Alright, thanks a lot and let's get into it. To put simply, after every 210,000 blocks mined, or roughly once every 4 years, the block reward given to Bitcoin miners for processing transactions is actually cut in half. This automatic event is referred to as a Bitcoin halving because it divides the rate by half at which new Bitcoins are released into circulation. And while some might say that this is Bitcoin's way of enforcing synthetic price inflation until all Bitcoins are released, many believe that it's going to go on forever. Well, sorry to break your heart, but this will never be forever, as once the proposed limit of 21 million Bitcoins is reached, which is estimated to be around the year 2140, the cycle of getting block rewards would stop. At that point, miners would start getting rewarded with fees, which network users will pay for processing their transactions. These fees will then ensure that miners still have the incentive to mine and keep the network going. Now, the Bitcoin halving event is significant because it marks another drop in the rate of new Bitcoins being produced as it approaches its finite supply of 21 million. And now that you understand what exactly is Bitcoin halving, it's time to know what happens to Bitcoin prices during that halving. To answer in one line, it sure does increase the price of Bitcoin. But still, here's a summary of what happened around the first 3 halving events. The first halving. It occurred in November 2012. Back then, the price of Bitcoin stood at around $11, and within a year, it rose 100-fold. Up next, the second halving. In July 2016, the Bitcoin network arrived at the amazing milestone of 420,000 blocks, triggering a second halving. The price of Bitcoin fluctuated between $500 and $1,000 for a few months, and ultimately rose to about $20,000 by December 2017. And lastly, the third halving. This halving happened in May 2020, coinciding with yet another bull run for the cryptocurrencies. At the time of this halving, Bitcoin traded around $9,000 and climbed the highest to around $35,000 by the end of the year. Further, in 2009, the reward for each block in the chain mined was 50 Bitcoin. After the first halving, it was 25, and then 12.5, and then it became 6.25 Bitcoins per block as of May 11, 2020. And when the next halving occurs, the block will only contain 3.125 BTC. You must be thinking, why is this Bitcoin halving needed, or what would have happened without the halving of Bitcoin? To answer this famous question, let's follow the facts. If there would have been no Bitcoin halving, all the Bitcoins would have already been mined till now. And so miners would only receive transaction fees with little cost as compensation. Why, you ask? Simply because it would have taken a few years for all the Bitcoins to be put into circulation. So let's do the math. Initially, 50 BTC per block was distributed, which is 300 Bitcoins per hour or 7,200 Bitcoins per day. An amount of 2,628,000 Bitcoins would be released annually, which, if we divide it by the total possible Bitcoins of 21 million, gives us almost 8 years the time it would have taken to put all the Bitcoins into circulation. Now, I hope you understand it a little better. Now let's take a look at the consequences that Bitcoin halving offers on different levels. First, let's start with the consequences for a normal user. To your surprise, for anyone who uses Bitcoin in their daily life when someone transacts or sends money all around the world, there will be no consequences at all. You can continue to use your portfolio as normal and as you have done so far. However, if we see consequences for a Bitcoin miner, then things would be different. Now, as miners are more important players in this case, the effect would be a bit more complicated. On one hand, a diminishing Bitcoin supply would increase demand and further prices. But at the same time, fewer rewards will also make it more difficult for individual miners or small mining outfits to survive in Bitcoin's ecosystem, because they may find it difficult to compete with large mining organizations. So, in a few days after the halving, we usually see if the same computing power is maintained by mining on the network, or if the miners stop mining due to the high cost and little reward for them. And I'm saying this based on the assumption that the price of Bitcoin does not rise in the market. Thirdly, looking at consequences for speculators, we can say that a halving might be the perfect time to start rising the price of Bitcoin, as the new reward will make Bitcoin increasingly rare. This, of course, is because the extraction of Bitcoin is reduced, and this leads to demand being greater than the supply, thus increasing the price of Bitcoin, and those who know how to handle themselves in these circumstances will be able to attain greater profits. Next, now that we know about the consequences, let's talk about halving and its effects. The theory of the halving and the chain reaction that it sets off works something like this. The reward is halved, which results in half the inflation, which further results in lower available supply, which eventually produces higher demand, which in turn results in higher price. But miners' incentive still remains, regardless of smaller rewards, as the value of Bitcoin increases in the process. But hey, it's not all. If in case a halving does not increase demand and price, then miners would have no incentive. The reward for completing transactions would be smaller, and the value of Bitcoin would not be high enough in return. To prevent this, Bitcoin is a process to change the difficulty it takes to get mining rewards, or in other words, the difficulty of mining a transaction. Now here if you see, as the reward has been halved and the value of Bitcoin is not increased, but still, the difficulty of mining would be reduced to keep miners incentivized. This means that the quantity of Bitcoins released as a reward is still smaller, but the difficulty of processing a transaction is actually reduced. In addition, this process has proved successful twice so far. Will Bitcoin come to an end? If the rewards keep halving like they do every 4 years at one point, the miner may feel that it's not worth mining Bitcoins anymore. Bitcoin mining requires a certain amount of electricity and computer resources, and the miners might feel that their rewards don't compensate them enough. They may switch over to mining other digital assets or begin digital asset trading. Many large organizations might still continue to mine Bitcoin, and this will lead to less decentralization of the network. Now, with the supply of Bitcoin coming to an end in 2140, there might be an increase in demand for Bitcoin. By that time, the digital assets market may be more stable and valued. People who mine the coin early or who purchased it first have a considerable advantage over others. The blockchain is itself built that way. There are many multiple digital wallets available that can hold your BTC securely. Even if the number of miners reduces or becomes null, Bitcoin will stay alive by trading in various digital asset transactions. Bitcoin halving is the main reason why Bitcoin is at the rate it is today. If there were no halving, Bitcoin would still be worth only a couple of dollars. In the past, many people have bought the coins at a lower price and sold them once it reaches a good profit. These people haven't benefited from BTC. Such people do short-term trading and earn profits from the rise and fall of various digital assets. Now we can only wait and find out what the next Bitcoin halving will do and speculate based on various predictions. So what do you think is going to happen in the next Bitcoin halving? Let me know in the comment section below. But that's it for this video. Thanks so much for watching. I really appreciate it. If you like this video and you want to see more, please don't forget to like, share, and subscribe to our channel. And if you got any questions, comments, or any suggestions for future videos, feel free to leave them in our comment section below as well. We'll see you next time, right here on Alpha Finance.